Good morning, dear students. Today we're going to study the calculation of operating cycle. If you have gone through the previous video where I have introduced you to the concept of working capital, there we briefly discussed what is an operating cycle and how do we calculate it. So let's take a real-time problem to calculate the operating cycle for this particular company. If you understand operating cycle, it is the turnover periods of the assets and the liabilities, current assets and the current liabilities. So, in fact, in the previous video, we have also gone through the formulas to calculate the turnover periods, or also called as the conversion periods. So, let's utilize those formulas into this particular problem. So, the question goes like this: estimate operating cycle as well as cash cycle. Okay, so it is gross operating cycle as well as net operating cycle is what we need to estimate. Now what is given in the problem? Particulars, rupees in lakhs is given. Okay, cost of production is given to us, which is 5,212. Raw material consumed is 4,349 lakhs. Cost of goods sold is 5,003 lakhs. Average stock of raw materials is given 827 lakhs. Average stock of finished goods is given 526 lakhs. Average work in process is 325 lakhs. Credit sales is 6,087 lakhs. Average debtors is 735 lakhs, and creditors are outstanding for 35 days. Okay, so these are the things given to us. Now how do we calculate the operating cycle? First of all, to calculate operating cycle, we need to go for the turnover, inventory turnover periods. Under inventory turnover periods, the first one that we have is the raw material turnover period. In raw material turnover period, if you remember, the formula was 360 into average stock of raw material, divided by raw material consumed. Right? So let's find out these variables in the problem. First, 360 is the number of days, so 360 as it is what we have taken over here. Then into average stock of raw materials. So average stock of raw materials is over here, so 827, we have taken it in the formula, and divided by raw material consumed, which is 4,349, which we have considered over here. So as the formula goes, it is 360 into average raw material divided by raw material consumed. Right? So average is 360 into average raw materials is 827 divided by raw material consumed is 4,349. If you simplify this, you get 68 days. Okay. Next is the semi-finished goods, also called as work in process. Please remember this. Work in process or semi-finished goods is one and the same. Semi-finished goods turnover period is calculated as 360 into average semi-finished goods divided by, it would be either cost of production, or you can take factory cost, or you can take the cost of goods sold if these two are not given. Okay, so in this particular problem, if you see, cost of production is given to us, so we can use cost of production for this particular problem. Okay, so as the formula goes, it is 360 into average semi-finished goods. So average work in process, I have already told you, work in process or semi-finished goods is one and the same. So average semi-finished goods or average work in process is 325 lakhs. So see, 360 into 325 lakhs divided by cost of production. Cost of production is 5,212. So 360 into 325 divided by 5,212 gives you 22. So the semi-finished goods turnover period or work in process turnover period is 22 days. Similarly, we do it for finished goods. So the formula for finished goods turnover period is again 360 into average finished goods divided by cost of goods sold. So 360 into average finished goods, which is directly been given to us, which is 526 lakhs. So 360 into 526 lakhs divided by cost of goods sold. So cost of goods sold is given to us, which is 5003. So 360 into 526 divided by 5003 gives you 38. So the finished goods turnover period is 38 days. Let's move ahead. After the inventory turnover periods are done, that is raw material, semi-finished goods and finished goods are done, we go ahead with the debtors turnover period. So what is the formula for debtors turnover period? It is 360 into average debtors divided by credit sales. Right? Debtors are related to credit sales. So we consider the credit sales. So 360 into average debtors is also been given to us, which is 735 lakhs. So 360 into 735 divided by credit sales. So credit sales is also given, that is 6087 lakhs. So 6087. So 360 into 735 divided by 6087 gives you 43 days. So the debtors turnover period is 43 days. With this, we are done with all the assets, all the current assets turnover period, that is raw material turnover period, semi-finished goods or work in process turnover period, finished goods turnover period and debtors turnover period. Now take the summation or add all these 4 turnovers to get the gross operating cycle. So 68 plus 22 plus 38 plus 43 gives you 171, which is your gross operating cycle. Now from the gross operating cycle, if we deduct the creditors turnover period, we get the net operating cycle or cash cycle, correct? So next thing that we need to calculate is the creditors turnover period. If you look at the formula for creditors turnover period is 360 into average creditors divided by credit purchase. But in this particular problem, if you see, creditors are outstanding for 35 days. That means they have directly given you the creditors turnover period. The creditors turnover period is directly been given to you. You need not use this formula for this particular problem. So since 35 days is directly given, we directly take it over here. So creditors turnover period is 35 days. So we have the gross operating cycle, which is 171 minus creditors turnover period, that is 35 days, gives us 136 days. Now what is this 136 days? 136 days represents the net operating cycle, or also called as cash cycle or cash conversion cycle. So this is how we solve problems related to operating cycle. First, calculate the turnover, inventory turnover periods, that is raw material turnover periods, semi-finished goods or work in process turnover period and finished goods turnover period. Then calculate debtors turnover period. Add all these to get the gross operating cycle. From the gross operating cycle, deduct the creditors turnover period, we get net operating cycle, or also called as cash cycle or cash conversion cycle. I hope you're clear with this entire calculation. Thank you. Happy learning.